let's talk about XAUUSD and see what's going on with the gold market today. So again, you might be feeling a little bit of hindsight, or not hindsight, FOMO, if you're looking at gold today, because of course gold is moving down. We're swinging to the downside here this morning, and you might be saying, "Wow, I missed the sell." We marked up our charts. We talked about the sell on gold, and look at this, you guys. We broke underneath this level, and just like we discussed last week, there was a break, retest, and then it dropped. So a beautiful start to the gold sell here. And again, very similar. We're going to sound like a broken record here from our analysis on euro dollar. Very similar stuff on the gold market, right? So gold comes up to this level. Of course, I thought it actually, I'll be honest, as always with you guys, I thought gold would sell sooner than this. I thought we might see a little bit more rejection once we tagged this level, but I was wrong. And what actually ended up happening is we retested a little bit deeper before finding sort of that seller that came in here. So you can see, I thought maybe we would get this level. So this was a key spot on the chart. Obviously it did not hold as well as I thought it would. We had other plans in mind, but then retested here around 125, or sorry, 1725 was the level where we really start to see sellers come back in favor of that daily chart downtrend. So until further notice, I think we see gold continue to go lower. And of course, that's not necessarily like, what is certainly going to happen. It's just a bias that I maintain until proven otherwise, right? So if I'm looking at gold, I can't sell it here, and I'm definitely not buying it here. So what do, right? And this is, again, where we're going to start sounding like broken records. We wait for the pullback, and we look for opportunities for possible re-entries if you miss the initial move. So let's say we start from the very top. You know what? Actually, I like this more. So what I like to do with my fibs is I like to look for pretty straight shot moves to draw my fibs. So if we get like consolidation, I won't, instead of, it's going to give you roughly the same area. This is why fibs and just in general technical analysis is not perfect. It's a bit subjective because the only reason technical analysis would work in the case that it does is if everyone is looking at it and finding the same general areas to buy or sell, right? If everyone's looking at the same concepts. But as many of you guys already know, people draw their charts differently. People have different zones. They have different trend lines. They have different moving averages. People draw it differently. So if we can just catch the general idea of an area, this is why I often talk about how hard it is to get the perfect entry. Everyone draws their charts differently. So the perfect entry arguably doesn't really exist unless you just have, a crystal ball and you're doing something fishy. No, overall, I'm content enough to just look for general areas. And in fact, in here, what I see is two scenarios that gold looks good on. And it's going to sound just like the euro dollar, 38.2, right? And the 61.8. Preference here, I would say, to the 61.8 because we saw such a rejection here. You can see beautiful. Look how this gold market moved. So we dropped underneath this. This was actually NFP news. And then we rallied back. But then by late afternoon on Friday and now into Monday, we see really strong capitulation to the downside. So very, very strong move there. So the question is, well, how do we get in, right? How do we catch a move like this if we didn't catch the initial move? Well, my opinion is gold could be a sell and a retest. Now, I'm not telling you to go do this. I'm just telling you that this is my opinion. I think gold looks attractive to the sell side. Should we poke up into 1695, 1706, lining up nicely with those fib levels. So if we were to look at this, again, we'll do the same thing where we take two theoretical trades. So we have a little structure there, maybe just above 1700 as a stopping point, and then marking the recent low here. This already is a 4.5 to 1, give or take. So maybe scenario number one comes into play and we try it there. But then let's say that one doesn't work. Same idea as the euro dollar. We can widen our stop just a little bit, maybe to accommodate some of this resistance looking left. And we can say, okay, well, this case is also about a 4.5 to 1, give or take. So scenario one, maybe that one comes into play and let's just say that one works out, right? But if it doesn't, scenario two could be our second attempt, right? That sort of thing. And then of course, there's the occasional time where we're just dead wrong. So I speak in theory like this when it comes to my trading setups and stuff like that, because, you always have to ask yourself, if something happens, then what am I going to do? Right. And you can't make those decisions on the fly. You have to be prepared for them before you even place a trade, in my opinion. The second you have a trade on, you should already know all the possible outcomes. How much you're possibly going to lose? How much are you going to possibly win? And what are you going to do if a trade moves in your favor or moves against you? How are you going to manage the scenario, right? All these questions should be things that you think about before you even place the trade.